So I think firstly, we've seen large numbers of borrowers taking out product transfers during 2023. UK Finance reported that number of around 219 billion. So a lot of those borrowers, if they do have further borrowing needs, would find that a second charge could be the most suitable solution for them. If they want to look at raising further funds for things such as home improvements, debt consolidation, pretty much any legal purpose, that's where again a second charge will help protect their first charge mortgage, particularly if they've got a preferential deal. If we look at borrowers who've got interest rates of sort of 2%, sub 2%, clearly they're going to want to retain that rate for as long as possible. So that's certainly one trend we expect to see from a second charge perspective. Another trend that could well be something we see more of is customers who have been thinking about moving home, feel a little bit uncertain still about the housing market, so instead may opt to improve their own home by taking out a home improvement loan, again something that a second charge really does lend itself well to. And then thirdly, clearly for some borrowers, taking out a debt consolidation loan can really be a lifeline at this moment in time, where it just helps to reset finances, particularly where we're seeing borrowers experiencing payment shocks as they refinance onto a higher mortgage rate. So with the right advice and in the right circumstances, debt consolidation obviously is something that we do expect to remain fairly prevalent within the second charge market. I think the challenges for 2024 are probably around affordability still. I think is still going to be a challenge for some borrowers. What I would really say to anybody thinking about further borrowing is don't assume that every affordability calculation is the same, because it really isn't. So for example, as a lender, we will look at various income streams. We can look to see whether somebody's earning regular bonuses and overtime, to see whether we can take a percentage of that income into account. I think the key thing is the loan affordable over the term, taking into account different complexities of the way people are paid or earn money, and self-employed is a great example of that. So that's something I think is still a challenge, but it's not unsurmountable, and with the right advice from a really good professional mortgage broker, that's certainly something that could still provide many homeowners with access to finance when they really need it. So I think in 2024, what we are starting to see for sure is more intermediaries engage with us as a lender, wanting to learn more about our second charge product range, probably more than I've seen certainly the last 2 or 3 years. And I think the reason for that is because lots of intermediaries now recognise the fact that we're all working in a changing economic environment, customers' needs are changing all the time, and smart brokers obviously want to adapt their business model to suit the changing circumstances of their sort of core clients. So I think that we'll start to see more and more intermediaries engage with second charges as they recognise the benefits and how important it is as a product, particularly at a time where we're seeing, big uptakes in product transfers over remortgaging for high street customers. So that's certainly something that we expect to be a growth driver throughout 2024.